Hello everyone. Why should we be investing in the US markets? And you should definitely not be investing in the US markets because I am saying, some YouTuber is saying, someone on X is tweeting that you should be investing in US markets, or maybe someone whom you know has doubled their returns in last 1 year or 2 years. Let's look at hard facts. What does US markets offers us? So this is the chart of Nasdaq 100. This is in dollar terms. If we look what has Nasdaq done in last 11.5 years, it has given a return of almost 618% in 11.5 years, which happens to be around 18.15% as a CAGR. See, these are exceptional returns. If you would be following the markets, what majority of people keep saying is if you are able to beat the broader index in your country, you are majorly doing very, very well. Investors like Warren Buffett, their lifetime time returns have been close to 20%, 22%. And here there is an index called Nasdaq, which has given 18.5%. Just imagine if you would have just invested only in Nasdaq, the kind of you would be nearing to what Warren Buffett has done all his lifetime. But this is not something, because of which we should be taking these steps. Let's go a step deeper. This is the same chart of Nasdaq 100 in rupee terms. In last 11.5 years, the CAGR is 23.17%. That's exceptional return. Warren Buffett has compounded at around 20-21%, and you could have beaten him at a 23%. Uh, I cannot emphasize enough the kind of returns the Nasdaq has given, but then this is for you to understand and follow. Let's come back to our country, India, and let's see what has Nifty delivered for the same amount of period. Normally, the claim from the institutional investors in India is the Nifty on an average gives 12%, 13% return. But if we look at last 11.5 years, the CAGR has been around 9.63%. The inflation at around 6%, 5 to 6%. Your annual returns are at around 9.63%. Honestly, you are not doing much here if you are doing index investing. Let's go to a broader index, which is Nifty 500. In Nifty 500, you would have done much better. You would have done better than Nifty, but if you look at the returns, they're not touching even a percent to a year. I mean, you for sure you are beating Nifty, but nowhere close to what Nasdaq is delivering. Nasdaq in rupee terms has given more than double of this, exactly what Nifty has offered. So when an investor looks to invest abroad, the major concern remains, is the market liquid enough? Because suppose you want to invest in a country like Sri Lanka because it is doing very, very well. But then you'll have to come across scenarios like, are you legally allowed to invest in Sri Lanka? The second point could be, are the markets liquid enough that it's not about that you will be pouring in a lot of liquidity, but then that remains a very normal constraint for any investor to understand what the liquidity, what the depth of the market is. Let's see how liquid is the US market. These are top 10 most liquid markets around the globe. The US stands at number one with a market valuation of 75 trillion. China is second at 14.84. Japan is third, 88.19. Hong Kong 7.41. India 4.97. Canada 4.49. Taiwan 4.48. South Korea 4.04. UK 3.99. France at 3.45. The depth in US market, if we combine all these 9 countries together, I don't think the sum reaches to 75 trillion. That is how liquid the US markets are. So you can be rest assured whatever amount of money you want to put in, the ocean is big enough to just swallow it. So you need not worry even about how liquid the market is, how, like, what's the exact depth of the US market. The second point, I said Nasdaq could have been one of the biggest investment opportunities in its own. This chart was presented by Raul Paul. He is one of the respectable macro investors from the US. What he showed was the total global liquidity in relation to Nasdaq has a 97% of correlation. So like all these big investors, banks, funds, they keep tracking liquidity. How, like, I'll try to explain you liquidity in short terms. Basically, the Fed from US and the government of US, they plan how the flow of money will be. And because the dollar remains one of the strongest currencies in the world, either we like it or we don't like it, the Fed basically shows the world where the money is flowing. And what Paul's study found was, if we don't study Fed very well or in deep research, and we don't study what the government of US is trying to do, if we just followed Nasdaq, that itself tells where the money is flowing. 97% correlation. Literally, you don't need any other indicators, any other instruments. You can just go into Nasdaq, and that is what is needed. I'll give you other reasons. What could be other reasons that you should be investing in the US markets? See, my perspective says the next major macro theme is AI and the industries in and around AI. What will happen? Like who are going to be the major beneficiaries of AI? Very, very high chances companies from this list could be one of the major beneficiaries of AI. And therefore, US provides an excellent opportunity not only for growth but exponential growth. Am I saying that India is bad? For sure, India is not bad. India has enough opportunities in the fields of infrastructure, energy, manufacturing. But AI is a once in a lifetime opportunity. You might not get the kind of exponential growth you are looking for in Indian markets, because see, most of the developed countries, this is the route they took. This is how they grew. So there is nothing unique about it. But when you combine it with the US markets, I think you create a wonderful bouquet of portfolio for yourself. So the opportunity is not India versus US. I think it is India and US. You can unlock excellent opportunities, new horizons in fields of trade, technology, and innovations, along with infrastructure, power, energy. And that is the reason I feel that each one of us should definitely have certain amount of exposure in the US markets. That's all from my side. I hope you all found this useful and insightful. Thank you so much. See you next time. Have a good one.